My guest today is Josh Frank. Josh is the CEO and co-founder of The Tie, a leading provider of digital asset data for institutions. Hey, welcome to the show, Josh.
Thanks for having me on. I appreciate it.
Welcome, Josh. Hey, it's good to have you here. Let's do what we do at the beginning of the show. Could you please introduce yourself? Love to hear just a little bit about your professional backstory, really, Josh. You know, what have you been doing in your life in the lead up to co-founding The Tie? What has brought you here?
All right. Well, I think I probably have one of the less exciting stories among the guests you've had on, but I'll try my best to make it entertaining. Originally a New Yorker, actually grew up between New York and Hong Kong. Went to McGill University, graduated, was by the way, throughout my life, always incredibly entrepreneurial. So in high school, I started a sports news website that was kind of like Bleacher Report meets Barstool that I scaled to about 1 million visitors a month when I was in college, or in high school rather, was selling candy out of my locker. So always kind of had that entrepreneurial bug. Graduated college, and started working at a company called SS&C Technologies, which is one of the biggest mid-back office financial technology companies in post-trade settlement technology, which, if you believe it, is significantly more boring than it sounds. And so naturally, this was, 2016, 2017, I started day trading crypto. And that was kind of at the time where, every time John McAfee or, one of these influencers put out a tweet, a piece of shit token would go up by 500 or 600%. And I was trading these things every day. And I was like, why are they moving? I kind of want to make sense of that. And that's actually kind of the impetus, and happy to get into what The Tie is and what we do. But really my impetus for moving into crypto full time and, was to make sense of the nonsense, which was, and I think continues to be, the crypto market.
Yeah, very well said, Josh. And I guess maybe the nonsense has died down a little bit, but it's certainly still there. All right, so The Tie. Give us I guess let's start at the beginning. Let's have a bit of a high level summary of what The Tie is.
Mm-hmm. Yeah, so I mean, I've started the company almost 6 years ago. So over the years, it's evolved and it's changed. It was originally me and myself, and that was it. And we're now about a 100-person company. So a lot has changed in that time. But really what we do at a high level today is we solve one major problem for institutions. And by institutions, I mean asset managers, banks, hedge funds, OTC desks, market makers, VC firms, you name it, which is, if you ask these folks, how are you staying on top of the crypto market from an information perspective? They'll show you their computer and it is a disaster. There's 40 different browser tabs open. They're on all sorts of different websites trying to stay on top of information. And that just didn't make any sense to me, right? Why do you have to go to 17 different, websites, which, by the way, have incredibly conflicting information? One website says a token has 70 active addresses. The other says it has 842, right? That just didn't make any sense. And so, what The Tie, at our core offering is The Tie Terminal. It's a platform that aggregates really all of the information in the crypto space that institutions mean. And I really mean all the information, from market data to derivatives data to sentiment data to blockchain data, research, private company, NFT, governance data, unlock data, you name it, all in a single consolidated interface. Today, we service a couple hundred of the largest institutions in crypto. So our clients tend to be, in some cases, tier one banks, multi-trillion-dollar asset managers, large traditional hedge funds, as well as crypto natives that, I think our most impressive metric, spend around 3 hours a day on average on our platform. So it's not just a tool in the arsenal of these institutional investors. It is the primary way that they're interacting with information. So that's kind of our core. We also sell APIs. And then we have two other pieces of our business that are tangential but are related. The first is we do a lot of redistribution of data. So if you log into like BitMax or Bybit or a number of other interactive brokers and you see things like news feeds or sentiment or blockchain data, in a lot of cases, we are the licensed provider of that data to these platforms. And the third piece of our business is what I would call token relations, which is a little bit, closer to like investor relations for crypto, where we think there's really, we work with these institutions. We're the primary place they're getting information, but there's really a disconnect between the token issuers and the institutions. They don't really communicate. They don't really know each other. And I think they speak two incredibly different languages. And so what we're doing is really trying to bridge the gap between the tokens and the institutions via things like quarterly calls, investor days, different presentations and things like that. So that's really kind of, the tie at a high level.
Yeah, fantastic. Thank you, Josh. And you're right. When you talk about how, say, a lot of different traders, perhaps, or people that aren't using services such as the tie, if they're trying to keep up to date with what is happening across the crypto ecosystem, then of course they are going to have that 70 tabs open on the browser. How many crypto Twitter lists, and then on-chain analytics and the rest. It's a lot for any one person to try and keep.
Even with the tool, it's a lot for any person, right? It's we like to say our clients use about 5%, if that, of our product, right? It is impossible to know why crypto prices are moving or what is going on, because there are so many different things, to your point, that is happening at the market at any given point in time. And in some cases, these assets are relatively illiquid. One dude came out and decided to buy $1 million worth of the token. It went up 50%. And there's no other good explanation for that other than some one guy came out and just bought a lot of tokens, right? So it is definitely a difficult challenge. But what we try to do is consolidate that information as much as possible to help people identify those opportunities. In a lot of cases, it's not just opportunities, it's identifying risks, right? One of the biggest challenges that you have in crypto is, look, the person that ends up making money in crypto is the person who basically, misses out on most of the opportunities to lose money, right? And so a lot of what we're doing with clients is that, helping them identify regulatory rulings in real time, exchange outages, token downtime, and things like that, to really, any sort of, risk around an individual moving capital or anything like that could potentially have a negative impact on their business. Because I think, risk management in and of itself is in this industry, arguably even more important than opportunity identification.
Yeah, absolutely. Well said. And, I'd love to understand a bit more about how you ensure that the data is as accurate as possible. Because, it's a funny thing about crypto, right? In one sense, the blockchain does not lie. It's very difficult to fake real on-chain data, but there are other types of data around the market as well. Obviously, social media data is a little bit different, and then in some cases you're relying on the different teams to be accurate and what they're telling various data providers as well. But just give us a sense of how you approach this.
It's a really hard question to answer. Because it is really hard to ensure the accuracy of every piece of information. And we do 40 different things, right? And so, doing one thing, in and of itself, it's hard to maintain accuracy from, let alone 30 or 40 things. To your point, the great thing about blockchain data is it is a public ledger and that information is available. With that said, what is occurring on the blockchain can be faked, right? In terms of, look, when you have these, L2s and inexpensive blockchains are fantastic because they open up all sorts of new use cases and they enable a lot of things. But what they also enable is the fact that transactions can be faked, right? And you can get to a very large number of fake transactions. You also have metrics like TVL that can easily be duped as well, right? When we say crypto has, however, I don't know what the number is, say, let's say 60 billion in TVL or whatever the number is, what that accounts for is the fact that somebody might take a token and wrap it TVL, put it in a liquidity pool TVL, and then you're starting to add together the same assets and you're overinflating numbers, right? And so I think at the baseline, what you have to do is try to figure out, how do I come up with the most accurate definition or explanation of what I am showing so that the end user really has a sense of what they're looking at? And an example of that is something like active addresses. I think a lot of people in the industry interpret active addresses as meaning that, like, if I told you Aave had 10,000 active addresses, what you might think is, okay, there are 10,000 people interacting with Aave on a daily basis. That's not what it means. An active address is somebody who's interacted with the token. So if you traded Aave on Uniswap, you weren't an Aave user. You were somebody who interacted with the Aave token, right? And so I think what's incredibly important as a starting point is being incredibly clear and consistent with how you actually define those metrics. So what we do, for example, in that case, and I'm not saying, we're the end all be all of everything. That's not what I'm trying to say, right? But like what we do is we actually will look at smart contract interactions for Aave. And if somebody's making a swap, they're depositing, or withdrawing liquidity, or they're doing something like that, to me, that is a user, which we separate out from an active address. And we're very clear to our clients on kind of what the difference is, right? So with blockchain data in and of itself, yes, it is a public ledger, but you have to be really clear about what the transactions and information you're looking at on the ledger is, and make sure that that makes sense and that's accurate. Another example of it, we're actually going to push out a big report on Uniswap in the coming weeks. Uniswap has seen massive increases in volumes, and that's because there's some activity which isn't, there's nothing wrong with it, but people are front running transactions in the mempool to provide liquidity and in order to basically capitalize on that. And so as a result, we're seeing these gigantic transaction volumes on Uniswap, not a big increase in the number of users, but like the actual volumes are looking gigantic just because there's all this front running that's occurring in mempools to basically try to sneak in. People are trying to sneak in. So imagine somebody's willing to provide, Aave USDC liquidity on Uniswap. Somebody will basically, they see an order come through in the mempool, they'll try to sneak in, provide the liquidity within one block, provide the liquidity, make the transaction happen, remove the liquidity, right? So you see this giant volume and spike in Uniswap, and that's not, that's not transparent, right? And so what we do with our clients, we try to, and we're trying to publish research on this and be really open with the market on like, hey, this is what's actually occurring, right? There's one big blockchain, I'm not going to name names, but like 99.9% of their DeFi transactions is one protocol, right? And there's a specific reason why people are interacting with that, right? So that's on chain. Then you also have off chain, which is a whole other beast and animal to deal with, right? One of the things that I think you said, which was really interesting, was trusting the teams. And, we like to think that people are honest and they're trustworthy. And I think that the majority of people are. But as we've learned from SBF and many others in crypto, not everyone is. And so I think a great example of that, and one of the biggest problems is token unlocks. So we have, built out a token unlock product for our clients. And what we do to handle the kind of problem of teams not being transparent with their token unlocks is we've taken kind of a 4-step approach to that. So the first thing that we'll do is we'll look at the white paper and we'll read the white paper, and hopefully that's accurate, right? What the white paper says is going to happen. And by the way, for anyone who's listening that doesn't know, a token unlock is basically when a token first launches and they raise money from investors. The investors don't immediately get those tokens to sell, and the people working at that token don't immediately get them, and others that are involved with the ecosystem. So what they'll get is, for example, a 4-year vesting period, which says, as an investor, if I invest $1 million for 10% of the tokens, after 1 year, I'll get 25% of those tokens. And over the next 36 months, that's generally how it works, I'll get 1/36 of those tokens, right? So they vest over time, right? So it's incredibly important to know as a trader or an investor in the market, when are these unlocks happening, right? And the reason that's important is, imagine you're holding a token. Imagine you're holding token A, and token A's current supply is 20 million tokens, but all of a sudden 60 million tokens are unlocking, and you're going to have this massive unlock event in the market. And there's now 3 times the supply of that token. And that could be, we could have 50 times more tokens released in the current daily trading volume. That's going to have a massively negative impact on price, because presumably those investors are looking for liquidity or team members working on the token or whatever else. So having accurate unlocks is incredibly important. The problem is, a lot of times the teams are full of shit and they're lying to you and they're not being trustworthy. So what we do is we start with the white paper, which is the initial document that they released. We then go and we go and actually engage in the Discord. We talk to the team and we say, hey, is this accurate? Is this right? We've had some tokens actually kick us out of Discord, refuse to talk to us, saying we're like, we're haters and we're hating on their token, when all we're trying to do is give our clients an accurate representation of what's happening. That's usually a really big red flag. The next thing, that we'll do is we'll look at any sort of investor rounds or announcements that have been made. But the thing that we do that no one else does, and we can't do this for every token, but for tokens, a lot of tokens will have what's called on-chain vesting contracts. And what that means is basically there'll be a smart contract on chain that basically says, okay, after 20 days or 30 days or whatever it is, deploy these tokens to these addresses. So what we'll do is we'll actually try to make sure that the vesting contract on chain matches what the team says. In a lot of cases, it doesn't, right? And sometimes it's simple and it's not like the team is trying to do the wrong thing. But an example of a problem that we see often is teams will say that they have monthly vesting, right? And to me, monthly means January 1st, February 1st, March 1st, April 1st. But the smart contract says every 30 days. So those are actually very different things, because in January already, you have 2 unlocks, right? If you think about it, 30 times 12 is 360 versus 365 or 66 days in a year, right? And so over the course of a 4-year vest, you could be 20 days off from when you think the unlock is happening, right? And so this is a very long-winded answer to your question. There's a lot more that we can talk about, but the point is diligence and transparency. I think the single most important thing is that you recognize the limitations of what the data is and what it can do, and you're very transparent with your clients about how you're going about calculating that data.
Yeah, very, very well said, Josh. Very well said. And look, I'm curious actually as to who you see as your competitors, because I mean I can think of the likes of Masari, I suppose, but there's not too many other really sophisticated data solutions that provide a complete overview of the crypto ecosystem like you. There are some really great dashboards and data sources for specific chains and events and things like that. But yeah, how do you see yourself in the competitor marketplace?
Yeah, so look, I think Mazzari is very different than us, actually.
Yeah,
I view them as being significantly more qualitative, and we tend to be more quantitative. So we aren't a
sure.
research provider. We don't produce any content. Like they're doing a lot of like write-ups on particular events that are occurring in the market, things like that. And I think that there are some things that they do that are fantastic. It's just a different product, right? I think they tend to work with, I would say, a generally less sophisticated client base than we work with. Whereas we're working with a lot of the big hedge funds and asset managers and banks and market makers. They are also working with them a little bit, but they also work with more corporates and entities that don't necessarily need as much detailed trade signals, opportunity identification, things like that. So, I think, look, for our core product, we kind of operate, we believe in a league of our own. And I think our clients believe that. I think, knock on wood, we've been very lucky where we have not had clients churn for another offering. It's not like there's something that solves a problem for clients, whereas we've taken clients from a number of products. But I think across the other business lines, certainly we do have competition. Like we have a blockchain data API. There are loads of people that have blockchain data APIs, right? We have a sentiment API. There are loads of people that have a sentiment API. So, across everything other than our terminal, we definitely have competitors. But I think on our terminal, we don't really, it's not usually an us or somebody else conversation, unless it's a very, very specific need, like, maybe a mid-back office at a custodian has a specific need for some information, or an exchange listing team. But other than that, it's not, we're lucky, and I'm sure people will come in, and competition's a good thing. It pushes us to do more. But I think we've been lucky to this point of really operating on our own.
Well, tell us then, Josh, what are your, I guess, favorite data points or dashboards within the tire? What are some that you think are underrated or underutilized? Because I know there's everything. You got obviously on-chain data stuff. You got the social media sentiment stuff. You got NFT data. You've got a fund screener that tracks all the different fundraisers and what is happening. So as you've explained, there's too much for any one person to kind of digest all at once. But yeah, what do you like?
I understand, by the way, that not everyone listening is an institution. Not everyone can buy the platform. So I want to talk broadly about the market and what I think is interesting. And obviously, a lot of this stuff we have on our platform, but I think, let's talk kind of more broadly. So anyone listening, even if you're not an institution, you can get access. There, one of the great things about crypto is, yes, the data is inconsistent. I think there are a lot of data problems, but I do think crypto as an industry has done a great job at making data freely and publicly available. We've actually done a little bit of that as well. So an example is we actually partnered with Avalanche, and we built a free public dashboard just on Avalanche. It's avalanche.thetie.io. If you're looking to learn more about Avalanche, GameFi, NFTs, or DeFi, or the metaverse, that's all available for you on a dashboard for free, right? So we are also working, and we do believe in the crypto ethos of being accessible and accessible market to all. So we're not trying to operate just for institutions. With that said, some of the data sets that I think I find to be more interesting. There are so many. I think token unlocks is an example of something that I just gave, is a really material and interesting data set. I think another thing that we are really focused on is this idea of insider trading in crypto. In equity markets, you have what's called 13F filings, which are basically quarterly filings that basically tell you which funds own which equities. And we are trying to track that in real time, right? So I want to know if the founder of, and I'm not saying that the founder of this protocol sold anything. Well, let's say that, one of the founders of Compound sold 25% of their tokens. I want to be able to tell my clients that in real time, because it's hugely important. If the founder of Compound no longer has faith in Compound, and again, not saying he sold anything, right? But like, that's something that's material, that's important. And that's one of the, an example of something that we're trying to make, available to our clients. Another example, which is within that realm, is, one of the things that no one really looks at that we care about is overlapping ownership across tokens. So for example, if I'm a VC or I'm an investor, or even I'm a trader that's looking long-term, right? I want to know if I hold, for example, SushiSwap, I want to know, like, it's important for me to know if 90% of the supply of QuickSwap is held by SushiSwap holders, because I'm not really diversifying by also buying QuickSwap, right? It has the same ownership, background. And so one of the really cool things that we have is actually showing you overlapping ownership between tokens. And that's pretty cool, right? So, what that means, for example, when FTX collapsed, you could see that 50% of the supply of FTT was held, 50% of the supply of Serum was held by a few large FTT holders, right? You didn't even know who those holders were, but you did know that there was some sort of ongoing existential risk to Serum because of that overlapping ownership, and Serum no longer exists, right? So I think that's another example of something that's really cool. And I think, the thing that I think is coolest these days, there's so many things, right? But I think one of the things that we're building, which I think we're the only ones in the market that have, is what we call on-chain usage data. So my point, earlier on active addresses is that it's really hard to know what is actually happening on these tokens, right? On these platforms. If you think about like a growth equity investor or, investing in a software as a service, a SaaS business, right? When an investor goes out and they're thinking about investing in a company, let's say they were thinking about investing in, take, for example, I don't know, let's say a cloud service provider, Google Cloud, right? They'd want to know with Google Cloud, how many clients they have, what is their churn rate? If clients are churning from Google Cloud, are they going to AWS? Are they going to Oracle? What other service are they going to? They'll want to know what is their customer concentration, right? You wouldn't want to invest in Google Cloud if 90% of its revenue is coming from one customer, because that would represent a huge existential risk. What if that customer goes away, right? And so, you'd want to know, what is the lifetime value of a user? What is their cost to acquire a user? All these different metrics. What are people actually using on Google Cloud? That's what you would use to actually determine whether or not you'd invest in Google Cloud. Why aren't we doing the same thing for tokens? And so we've actually built a lot of those same metrics for tokens, where you can go in and you can look at, like, okay, with Uniswap, how many active, wallets are interacting with Uniswap? How many new wallets today? What are they actually doing on Uniswap, right? Are they swapping? Are they providing liquidity? You can look at their churn rate, which is really cool. So we can show you cohorts, and that's really important. What that means is basically 10,000 wallets interacted with Uniswap for the first time in May 2022. What percentage came back after month 1, 2, 3, 4? How's that changing over time? And the really important thing for crypto is a lot of the ways that protocols have come and gotten new users is through liquidity incentives, right? Everyone has chased an airdrop, right? And so the last thing you want is to see, this protocol had 100,000 users because of an airdrop, only 500 of those users are left, right? And that's really important. So being able to look at, okay, there was an airdrop here, are any of those users remaining? And then we can get into even more detail. We can show you, like, for example, if a user is left Uniswap, are they going to QuickSwap? Are they going to SushiSwap? Are they going to Compound? Are they going to another protocol in the space? We can even show you demographically where are those users located from, based off of time of day from a geographic perspective. We can show you, data on customer concentration. So I can show you Justin's son's wallet interactions with Aave and what percentage of fees he accounts for. So we can get to that level of granularity. And I think it's so cool because that is something that, like, a traditional VC would work with a company to produce data on, and you'd have to trust that the company is producing the right data when you're investing. We can pull that data off the chain and show you the real truth and show you more granularity and depth without the token's consent, which is just such a cool idea. And it's not relevant for traders necessarily, but I think just in terms of, like, something that crypto enables, that's really cool. I think that's an amazing example of one.
Got it. Thank you, Josh. Well, as we finish up this part of the podcast, then I suppose, tell people where they can go to learn more about what the TIE has to offer. And I don't know if you're happy, comfortable, just kind of giving a sense of, what it does cost if there are different tiers of access depending on who you are. But where should people go to find out more?
Yeah, so you can follow us on Twitter at TIE.io. You can go to our website, thetie.io. We also have a research section on our website, again, which is free to the community. So if you can't afford a subscription, we don't disclose our pricing publicly, but we only sell to enterprises. So we will not do business with individuals. So you have to have a, generally it's a fund or some sort of company within the crypto space.
Got it. All right. Well, I reckon we go to a very quick break and then we'll come back. We'll have some fun. We'll finish off and we'll run Josh through the very famous crypto conversation, hot take round. We'll be back in 1 second. All right, we are back, and I'm with Josh Frank, CEO and co-founder of The Tie, one of the leading data providers to institutions, data for digital assets, of course. Hey, Josh, I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Let's do it.
Let's do it, Josh. I'm just going to run some questions at you. Just give me kind of like, I don't know, hot take style answers. Let's see what you've got to say. Question one, I think we know the answer, but where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I would say I don't believe they're mutually exclusive. I would say part of me is a Bitcoin maximalist in that I really believe in this idea of the limited supply of Bitcoin, right? The idea that there will only ever be 21 million Bitcoin. And honestly, there will only ever be probably 17 million because a lot of Bitcoin is lost, right? People have lost their private keys and their wallets and things like that. And, and I view, the idea that, look, in a world where the government has printed trillions and trillions of dollars, and in a world where, there's developing economies that have gigantic inflation rates, and that have mistreated, their people. I believe in the idea of kind of this, hedging asset and looking at Bitcoin as a hedging asset. And for me, the way I actually look at Bitcoin is, look, let's say there's 17 million. Let's say there's even 21 million of them. Every Bitcoin I own, there could only be 21 million people in the world that own more than me. Every 2 Bitcoin, there could only be at max, and there's not, because there's thousands of people that own fractional Bitcoin, millions of people that own fractional Bitcoins. That's the way I look at it, where it's like, I can actually look at in terms of if there's a world, you don't have to believe with 100% certainty that everything's going to go to shit and Bitcoin is going to be the world reserve currency. I don't think that it's rational to think that. But with that said, there is a small percentage chance that happens. And there is certainly the chance that governments will continue to inflate currency and print money for years and years and years to come. And so I actually like to think about, like, you can actually go to there's a couple of websites you can go to and you could look at like, okay, where do I sit? How many Bitcoin holders are wealthier than me? Which is, I can think of, a cool way to kind of think about it. So in that regard, I really do believe in Bitcoin and the premise, the ethos of Bitcoin, but I do think that's different than the rest of digital assets. And I kind of separate them out. And I think you can be a really big Bitcoin believer, but also a believer in alts. And I think the idea that, look, like, I really believe in stable coins. I think stable coins are an incredibly useful and valuable technology for transferring money instantaneously, permissionlessly around the world, especially in places in developing countries where, it could cost 7 or 8% of the post office to send money, where people are getting destroyed on fees at Western Union, where there's high inflation. And having a US dollar is actually a lot better than having a bolivar or any, any native currency. So, I think, that's interesting. I think there's certainly a lot of interesting things being built on blockchains. Like, I think gaming is going to be interesting. So I'm definitely, I wouldn't say with confidence that I know what is going to win. I don't think I know much, but I do believe in Bitcoin. And I do think that there will be a lot of interesting things that emerge out of digital assets.
Yeah, fantastic answer, Josh. And look, I couldn't agree more. It's fine to be a Bitcoin maximalist in one sense, in terms of believing in the 21 million Bitcoin and as a hedge against, pick your poison, inflation, uncertainty, all those things. But of course, it makes sense to have a multi-chain world where all those other kind of future financial transactions can live. Next question for you. Well, let's actually just keep it kind of Bitcoin related, Josh. Next Bitcoin halving, roughly 300 days away. And of course, big news around BlackRock filing for a potential spot Bitcoin ETF, or something that looks a lot like one, certainly. I guess you talk to a lot of institutional type folk. How important is the Bitcoin halving narrative going to be and the lead up to it? About 300 days away. And of course, how big is this BlackRock ETF, and does it get the tick when?
So I don't think the Bitcoin halving matters anymore unless people believe it matters. I mean, the amount of Bitcoin that's being mined continues to go down and become smaller and smaller and smaller, right? The first Bitcoin halving, you went from 50 to 25 Bitcoin a block. That's really significant. But now we're talking, I think what the next one is 3.25 Bitcoin a block, right? So, we're getting to the point where, or 3.125, whatever the number is, we're getting to the point where it's just becoming marginal and marginal and marginal and marginal. I think it works as a narrative if enough people believe it works, but I don't think the actual selling pressure from Bitcoin in relation to the overall liquidity of the crypto market has any sort of impact at all. I do think it's pretty bad, though, in terms of, I don't think people are talking about this. And look, I want to be bullish crypto. I run a crypto business. The majority of my liquid and illiquid net worth are in crypto, so don't get me wrong. But the crypto miners have struggled, and they're going to be struggling even more with the halving. And there are a large number of companies that lent to miners that can be impacted by this. So there are some knock-on effects of miners having issues as well that I haven't seen a single person discuss that I think need to be part of the conversation. So there's that. And obviously that's the thing that we don't want to talk about. BlackRock coming into Bitcoin is a big fucking deal. There's nothing they've been coming into Bitcoin, but filing an ETF, and it is an ETF, right? It's the same structure as GLD and a number of other ETFs, which they're actually trust, and crypto Twitter loves to drive themselves crazy about things like this. It's an ETF, right? BlackRock has 600 plus ETFs that are available. They own iShares, right? Every financial advisor, every single financial advisor knows iShares, and at some point has probably offered iShare products to their customers. Right now, all of a sudden, your financial advisor, which couldn't otherwise offer crypto, is offering a BlackRock product to their client base. Right? That's exposing crypto to hundreds of millions of people around the world. It is a huge deal, and it's a huge deal because other people are going to look at this and they're going to be worried that they're going to fall behind. Right? BlackRock is the world's largest asset manager. They're taking crypto seriously. They have 100 plus people on their crypto team, right? And it's also amazing because it's a giant FU to Gensler in the same week, or within a week of Gensler coming out and taking this anti-crypto stance. Granted, he hasn't come out against Bitcoin, but it's still, nevertheless, even if unintentional, a giant FU to Gensler, which is fantastic. It's a big deal. I think we'll see how it plays out, but their track record, I think, they've only ever not gotten ETF approved once out of 600 plus attempts. I think they have to be fairly confident in that they put together a compelling case towards the SEC.
Yeah, very well said. All right. Josh, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So with that in mind, 10 years, obviously in crypto, a long time, but whatever you like, Web3, metaverse, the tie, what does it start to look like in 10 years time?
I mean, I hope my hope for crypto is that it, becomes a technology that's at the backbone of a lot of things that we do. Not everything. It shouldn't be at the backbone of everything. And I think a lot of people in the space like to think crypto is going to take over everything. I don't think that's the case. But I would love for things to run on crypto rails without anybody having to know that they run on crypto rails. I think one of the biggest problems that we have in this industry is the UX and the onboarding onto crypto is very difficult, right? I think, the idea of if we have, items and games be NFTs that happen to exist on blockchains without the users having to onboard through a wallet and going through that entire experience, but I think ideally in some ways we figure out, and I don't have the solution to this, but we figure out how to make, things that exist in the world interoperable with one another through blockchains without the user having to deal with the UX problems of blockchain that exists today. I think, hopefully, I think that's the hope for, where we get in years from now.
Yeah. All right. Flip side of that, of course, is a quote by William Gibson, who said that the future is already here, Josh. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't aware of it?
I mean, I think stablecoins as really solving a large number. I know it's the least sexy answer. I always give this answer, but I think they solve a lot of problems that exist with global remittances. I just think they do, right? I think the fact that, and I think the U.S. government is so dumb that they don't see this, right? The fact that we are making more and more and more people rely on the U.S. dollar, right? If we see hundreds of billions, if not trillions of dollars of stablecoins issued that are U.S. dollar denominated, that are backed by U.S. treasuries, we're increasing the reliance on the US dollar, which I think the government is completely blind to in the US. But I think it's an amazing thing that somebody in Venezuela or Pakistan or the Philippines or any countries that suffer from high inflation can get access to a US dollar that they can transact, that they can move instantaneously to anybody else in the world, right? I think that's an unbelievable technology. We've already seen that use case in the real world, just, from, our view, I know you're in New Zealand, I'm in the US, right, that are developed countries, maybe there isn't as much of a need for that, but we're starting to see that happen in developing countries. I think it's incredibly exciting. I think it's going to create, a lot of opportunities, in the world, right? If you can, if you have $100 and all of a sudden it's worth, $50 at the end of the year because your country had 50% inflation, right? Versus, the US is going to have 7% inflation or 4% or whatever we had this year, right? You're retaining a lot, it's creating economic opportunity for people, frankly.
Yep. Nicely said again, Josh. Time to finish this off. Final question for you is, what is your favorite science fiction book, film, or TV show?
Oh, man. I'm going to give you not the best answer, but I love The Mandalorian.
Yeah.
I know I could go into, I could go off the rails with something a little bit, more creative, but I think The Mandalorian is it's the Star Wars Mandalorian. It's so great. Even I know people didn't love the last season because it played into Grogu or Baby Yoda a little bit too much, but I loved it. I think that's an amazing show.
Yeah, nice. I'm actually I'm rewatching all the Star Wars films with my son at the moment because he's going through a lightsaber obsession, funnily enough, and getting really deep into there's a world of lightsaber lore that is kind of developed from all the the animated films and the Mandalorian and all the other content that is produced around the Star Wars universe. So it's amazing to see all
I do
that
every few years. Like I've seen them so many times that I know what's going to happen, but I like to try to forget them a little bit, and then every few years come back and just watch them through. So
yeah, I love it. All right. Hey, thanks so much, Josh. Thank you for coming on the show. Been great talking to you. Close it out by just, telling people where they can find you on Twitter. And again, shout out the tie for institutions.
Yeah, so you can follow me on Twitter, though I'm not, I wouldn't say I'm the most active Twitter user, but I'm trying to be a little bit more active, at Joshua Frank the Tie. You can follow the Tie on Twitter at the Tie.io. We post a lot more there. And you can find the Tie on at the Tie, THETIE.io. And thank you so much for having me on. I appreciate it, Andy.
Awesome. Thank you so much, Josh. All the best and bye for now. All right, there you go. That was Joshua Frank from the Tie. Good fun talking to Josh. He was a good talker, actually. He has his own podcast, so that'll be why. I don't even know what it's called, but he does. So look it up. Joshua Frank, the Tie. Find his podcast. Yeah, as I say, Star Wars. I'm watching Star Wars with my boy at the moment. We just watched second half of Empire Strikes Back last night. Man, I mean, I think probably accepted canon now that The Empire Strikes Back is the single best Star Wars film of all time. I don't know if that's controversial, but I think that's true, obviously. But man, it's just incredible watching it again. Every scene is really iconic, really. The whole film, every scene, just so iconic. Such a good film. So yeah, there you go, Star Wars. But as I say, my son has discovered this lightsaber site that essentially build custom lightsabers based on the Star Wars universe. Quite expensive. I guess they're reasonably high quality collectible pieces. But yeah, it's quite a rabbit hole he's gone down. Anyway, that's an interesting way to finish the show, isn't it? Some punishing Star Wars chat. All right. Well, thank you, team, for listening. This is another episode of the Crypto Conversation. Please make sure you are subscribed to the podcast in whatever podcast app you are using. But that is today's show. Thanks, team, and bye for now.